Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome back to Multifamily Rockstars. So this is where we interview people that are crushing it in this business, and you guys get the inside scoop of how multifamily investors are just creating incredible success in their businesses and in their lives. And as always, I've got my co-host, who's the director of my massive action team for my Warrior Mentorship Program, Mark Nagy, on the call. Mark, what's up, bro?
Hey, Rod, not too much. Just excited for our call. I know our guest today was just telling us about a little bit of a unique deal that he did, which, we'll have to get into. I'll let you introduce him, but I'm excited to get into it.
Yeah. So we've got Chris Grant with us today, and Chris is, he's in 3 syndications of 453 units. And those are as an LP, but he just closed on a 24 unit, which we're going to dig down on. And, I don't know when. Well, anyway, before I get into questions, welcome to the show, brother.
Hey, thanks, Rod, and Mark. Thanks for having me on the show. I really appreciate it. For the opportunity to kind of share my story.
Sure. So when did you join the Warrior program? You'll have to refresh my memory.
Yeah, so we actually joined the Warrior program not last June, but the June before. So June 2019. So we went to the live event in Denver, and we.
It was the Denver event. Oh, okay, awesome. Yeah, that's where I had my mom there. My brothers brought my mom from assisted living, and she's in the wheelchair, and she was in the front row, and I'm behind the curtain crying like a little baby because she's the reason I got into the business, and I had to pull myself together to come on stage. That was quite an event. That was a really important, special event for me. Well, awesome. So why don't you take a minute and talk about your background, Chris, and how you got into this business, and bring us up to date, if you would.
Yeah, I'd love to. So I got started in real estate, buying investment real estate back in 2011, actually. We bought our first single family house. It was a foreclosure property. And this is when we lived up in Washington State. And we bought it solely for a rental property. And then later that year, we actually converted a house that we were living into a rental property. We've always been interested in real estate. I actually grew up living in apartments. My mom was an on-site property manager. My dad was actually a maintenance supervisor. So kind of a unique perspective of kind of living in them. And then, being around my mom and dad who are actually involved in the business. So in 2011, we always knew that we wanted to buy real estate. So we started with buying a single family property and then converting our primary into a single family property. And then we had our son. So kind of used that. We put a pause on the rental property because I also worked a W-2 job. I was working as a manufacturing manager for an aerospace company up in Washington State. So after we had my son, we put a pause on the real estate, which I kind of regret doing. I wish we would have kind of kept chugging along at it. But, as the years went on, we had 2 more kids. I had my 2 daughters over the course of the next few years. Then we decided, we really want to take our real estate investing to the next level and kind of get out of the W-2 job. I was working quite a few hours, a lot of stress, and, it wasn't really the passion, the career that I wanted to be in long term, and I knew that. So at the beginning of 2015, me and my wife sat down and we said, actually, we went to a seminar. It was on flipping houses. We got all juiced and inspired there. And I said, you know what, I want to get back into rental properties and I want to get enough income to quit my day job so we can kind of be free to do what we want to do. So we decided at the beginning of 2015 that was going to be the year we're going to do that. So kind of like you mentioned, Rod, it's kind of one of those things where when you go to do something, when you tell people what you're going to do, right, it kind of puts it out there and you kind of feel, I don't want to say the pressure, but you feel motivated to
some accountability there.
Yeah, exactly.
Right.
So in that situation, the job was great, right? I was making in the 6 figures, the benefits were awesome, the healthcare, everything that you'd want in a job, 401k. So, naturally we told our friends and our family, and the first thing they thought was, what are you doing? You sure you want to do that? That's crazy. You have kids. Actually had one person say, you have a family, right? What are you going to do about your kids? It's like it was just like a death sentence. So, but that was just motivating, right? We knew what we wanted to do, and we had a plan. So, through the course of that year, while working my W-2 job, we started flipping houses. We held some, we sold some, and then started building up a rental portfolio while we did that, and then also extra cash to kind of supplement purchasing rental properties. And at the end of that year, I quit my W-2 job. There's obviously a lot in between that that went on, but I went down to the very end of the year, and since then I've been kind of focusing on real estate investing in either flipping capacity or rental capacity. Although we did stop flipping houses late 2017 because, believe it or not, I thought the market was too hot back then. And obviously, if I would have stuck with it, it would have been in a better place too. But yeah, we're so happy with the decision. Just having that financial freedom to do what you want, spend time with our kids, go to their shows at their schools without having to request time off if it's during the day. It's just priceless, and I wouldn't go back to it.
Yeah. So why did you join the Warrior program?
Yeah, that's a great question. So like I said, I quit that job in 2016 and actually went to the first Warriors event in 2019. Over that period of time, I was just managing my single family and duplex and small multi portfolio in Washington. We got sidetracked a few times with some fitness businesses and a few other entrepreneurial things, but we kind of knew we really wanted to be in the real estate, and the next step was to scale up, right? So before we came to your event, Rod, we knew we wanted to get coaching. We wanted to get help to take that next step because we're adding more zeros to the projects we're doing, right?
Sure.
So one mistake, and it's
it could be the first and the last one, right?
It could be the first and the last one, right? So coaching is just one of those things to where it's kind of preventative, right? If you can avoid making one of those mistakes, it's going to be less costly than it is going to be,
sure.
Frankly,
Than paying for the coaching. Yeah. It's usually a multiple, but yeah. Okay.
Yeah. So, we went to a few different events. We actually talked to a few different coaches, but, with your group, what we really liked is you and Robert really have that kind of the dynamic duo, right? And your coaching program, it doesn't just focus on just the real estate, it focuses on the mindset, which, like you said, is, over 80% of, actually getting things done in the business. So we really like that aspect because it kind of combined the high performance coaching along with the real estate coaching. We in 2019 went to your Denver boot camp, as we mentioned, and we decided your team and was the best fit. And honestly, when we went to your boot camp, not just your team, but just the atmosphere of people that were there, attendees, is just amazing.
Right.
We actually went
it's
back
great energy. Yeah, it's great energy at those events. Even on live stream events, we get that kind of energy. It's amazing, and just really a blessing. Okay. And so let's talk about, well, let me circle back to something you said, because it was really important. You got a lot of dumbfounded looks and reactions when you said you were going to quit your 100K plus a year job with incredible benefits. And they're like, what about your kids? They're going to be on the street starving. I mean, one of the things I want to mention is, and you guys may have heard me say it before. If so, forgive me. But the bottom line is you want to be very, very careful who you allow to influence you, because people out of their own fear, or their own, fear of failure, fear of rejection, fear of losing you because you're growing and advancing, or it could even be jealousy in some cases. There's so many motivations for people to try to derail other people's dreams. You've got to be, and very often it's family too. I don't know if it was in your case, but and I tell people, love your family, but choose your peers, choose who you allow to motivate you. And I think you saw that, that's one of the incredible benefits of being in a group like ours is that motivation that everybody wants more. It's like this own little ecosystem that builds on itself, everybody helping each other, motivating each other, growing together. And so you want to be around people that want more out of life. And it's so important, because who you hang out with is who you become. And so, I just wanted to draw attention to that. But now let's talk about that 24 unit you just did.
Yeah. And just before we go to that, I'll just touch on that
sure.
real quick, Rod, what you mentioned on the fear. A lot of it was just fear. And, they were just looking out for, the what if for us. And, the biggest factor for us quitting our job and other major moves that we made in our life are, what's the worst case scenario? I think when you take a step back and you say, okay, I'm going to quit this job. I've been a great employee here. I love working here and I've done a lot for this company. I know I'm a hard worker. So the worst case scenario is I go out for this year and I'm not able to get it done. They'd be more than happy to have me back, or another company would. And then I have rental properties, plus I'm back at a W-2. So if you really start thinking about the worst case scenario in most things in life, it's really not that bad, right?
Yeah. If you can handle the worst case, then it's all uphill from there. And that's how I look at things as well. When things were crashing back in February with March with COVID, I'm like, okay, babe, we could be, we'll have to see. Could we, that may not be teaching anymore. It might just be buying multifamily. And, and then we look at worst case and all. We did the same thing. We, everybody goes through those. Well, let's talk about that deal. So talk about that. If you give us a little background.
Yeah. So this is a unique deal. So it's actually the whole project itself was 28 units. So this is a direct to seller. So we actually we do have broker relationships out here in the Phoenix market. We reach out to them periodically, but what we found was a lot of the deals we were getting for the return criteria that we were looking for and that we wanted to provide to investors is, we were seeing most of the deals were, 20 to even 30% over the price that would make sense for us to do a deal and, offer the type of returns that we expect for ourselves and for our investors, right? So, the next step, what we started to do is, how can we get to the sellers directly, negotiate with them, and kind of try to find a deal that, may fit our criteria. So we got launched a direct to seller campaign. We were doing things from cold calling, texting, emailing, just, directly reaching out to the sellers to try to see if we can drum up some interest. We reached out to over 300 sellers in the Phoenix market, and a lot of no's. We got a ton of no's, right? Which was expected.
Sure.
So, but we had some people who said, "Oh, maybe we'll be interested in the future, but not right now." And we added them to a follow up. In this particular deal, it was all about timing, right? I think it was the third or fourth time we had reached out to them via text or a phone call, and we finally got a response, right? And it actually wasn't a response directly from the seller; it was from their property manager. She said, "Hey, it's this might actually be good timing. Right now, the seller, they either need to refinance or they need to sell the property. So I think you might be reaching out at a good time. So once you work up some numbers and tell us where you think you could be, and I'll run that by the seller and see if it's something that would fit." So she was very vague with the profit and loss statements. It's a kind of a mom and pop show, so there wasn't like fantastic financials you'd get from a real property manager. So we came up with a number. We presented that to the seller, and after a little bit of negotiations, we got a signed LOI, and we were super excited, right? It was our first deal. And actually, believe it or not, Rod, me and my wife, we were driving through, we recently moved to Arizona. We were driving through kind of a dream neighborhood of ours, kind of visualizing it. And that's actually when we got the phone call that they were going to accept our LOI. So it was just
Nice.
by chance. So
Nice.
So we got the LOI signed, and then there was a lot of time between the LOI and having them sign the contract. What we found was we were a little less prepared with our transaction attorney and the amount of time that it would take to kind of go back and forth with revisions. So we got the transaction attorney involved. They started drafting up the contract, and we sent it over to the broker, and they just had lots of questions, and they were very slow through the process to respond to questions that we had. So there's probably 4 or 5 revisions of the PSA before we actually got to the point where they're about to sign the PSA. So through that step, right when literally the day before they were supposed to sign the purchase and sale agreement, they received another verbal offer from a buyer. And we were like, because we knew this was a great deal, right? So after all that work, we spent quite a bit, with the attorney to get everything just right, that favored, that was in our favor for the contract. And then we just told her, "Hey, we put so much time into this. What do we need to do to get this deal done? I know you can't tell me what the other offer is, but I know you've committed a lot of time and we've committed a lot of time, and we'd like to move forward with this deal." And after a little bit of negotiating, we went up on our purchase price because we want, to take it to the next step, and the returns were still great, right? So we went to the due diligence. And then at that point, we started doing our due diligence walks.
So you were under contract. You got it under contract.
Correct. Yeah. Okay. We got it actually signed up, and we're under contract. So that felt good, right? Knowing that we didn't have to worry about any other offers coming in at that point.
Right.
So this is a unique deal because it's actually a series of fourplexes that are make up these 28 units, right? but there's one of them that's not contiguous with the 6 parcels, right? So there's 6 buildings which make up 24 units that are contiguous, and then there's one that's non-contiguous. Well, that got a little tricky with the financing, right? Because some lenders don't like when you have non-contiguous parcels. So that was kind of hiccup we had when we were kind of going through our financing options, kind of concurrently with our due diligence. And that's when we decided that we were going to break that one fourplex that wasn't contiguous away from the main deal and deal with that separately, right? So we went through our due diligence, and then when we got to finished, we knew that we had gone up about $175,000 in our purchase price from where we were originally at. And we really wanted to get back to closer to where we were. And that was kind of part of our strategy going into it, right? Get into the property. Maybe it's in better shape, maybe it's in worse shape, and we can kind of take it from that step. It's the due diligence cost was very minimal at that point to kind of take it to the next step. So we renegotiated, and we, of the $175,000 that we went up, we got them to come back down about $145,000. So net, we were very close to where we originally were, and we were very happy with that.
Nice. Now, what did you actually? Never mind. I got you answered my question.
What? Obviously, a few hiccups in that deal, or speed bumps, if you will. It sounds like. And then I know when I saw your Facebook post for this win for this deal, I know you mentioned that, mindset was something that was super important in the entire process. I mean, tell the listeners here about how mindset really helped you through that entire deal, or even just leading up to that deal.
Yeah, I think, that's a good point. The mindset piece was so important, especially because this was such a long, kind of drawn out deal. I think it was 159 days between the time we got the signed LOI to the time we closed it. So it was lots of ups and downs from the lending and on. So the mindset was so important because it was so long and drawn out, right? We were thinking about it the entire time on all the what could happen, or where could we do better, or, what if this pops up, especially when we were working with the lender. So it was just, and then when it came to raising the capital, frankly, because, this was our first time raising capital on a deal. So we were like, okay, it's different when you're talking about a deal, right? And you're like, oh yeah, I think I can raise X amount of dollars for this deal. But then it's like, okay, now we have, $130,000 of essentially hard earnest money, and then so you start kind of, second guessing yourself, and you start thinking, oh, can I really do this? But, we kind of kept on taking a step back, and it goes back to like what's the worst case scenario, right? We knew when our money was going hard, we knew when our deadlines were, and we had a graduated steps on what our risk was ticking up as we approached each step. So that was one thing that kind of calmed us down a little bit, knowing kind of where we were in the process. And then the next step is just talking to other people, people in the Warriors group. There's lots of people we got support from in there, whether it's, process driven, that's what we love about the group is everyone in there is open. No one's, trying to hide secrets or just think about themselves. We're able to reach out to a lot of experienced Warriors in there who have done deals and say, hey, what would you do in this situation? Or, we're running into this issue with the lender. Is this something typical that you see on your previous transactions? And we got so much support from various Warriors in the group. And we partnered with some of the Warriors in the group, and we actually had a few of our friends in there who invested in the deal. So I think it's just kind of who you surround yourself with and being able to open up and reach out to people for support.
So you partnered with some Warriors, and you had Warriors invest. Yeah, there's a tremendous amount of money in the group, and most of the 40,000 plus doors that have been done in the 3.5 years since I've been teaching have been done between Warriors. So it's really encouraging. By the way, guys, if you're interested in the Warrior program, text the word crush to 72345 so we can help you crush it in this business like we're helping Chris and Chelsea. So again, text crush to 72345, and we'd love to chat with you, see if it's a fit. It's an application process. We'll see if you're a fit, and you can see if we're a fit. So anyway, so Chris, what suggestions would you have for people that are just starting out thinking about this business? What suggestions would you have for them, knowing what you know now?
I'll go with the kind of the blanket response that you get a lot is, start sooner, right? I wish I started sooner. I wish, when I decided to do single family, we decided to just scale up from that point, right? Instead of taking a pause in late 2017 because the flipping market was too hot and just managing my portfolio, wish I would have taken the step to go into the multifamily at that point instead of waiting till 2019. And then kind of secondly, which I kind of touched on earlier, is the mindset part, right? Is when you run into an issue or something you want to do, it's obviously it's natural to kind of start thinking of all like the worst case scenario, or, oh, I can't do that because, this might happen. I can't quit my job because I'm not going to have health insurance. That was kind of the main thing that popped up. Everyone says, well, if I quit my job, I'm not going to have health insurance. Well, health insurance is just an expense, right? Something you account for. You start coming up with solutions instead of excuses, I guess, and kind of changing your mindset. I think that's the biggest thing is if you think about the worst case scenario and then come up with solutions to them, there's really nothing you can't do.
Well, a golden nugget that I just want to point out there, not just on the mindset, but the mindset of having other people around you. Even if it's not with our group or the warrior group, people should be surrounding themselves by those types of people. Because think about if you were going into that deal on your own and you ran across those hurdles and you didn't have other people around you to make you feel confident and have that right mindset. I talk with people every single week that go through that process, and it breaks them right then and there, and they don't end up closing on the deal because they just don't have that confidence and the people around them. And so, just surrounding yourself with the right people can be a big part of that mindset as well. And so I love that you mentioned both of those. But let me ask you this here, Chris. What do you think is a characteristic that every single leader or every single multifamily investor should have in this business here?
I would say like passion and drive, right? You really got to love it. Like I know Rod says this, you got to love it or learn to love it, or it's not the business for you. But being passionate about it, that goes with anything you do in life, right? Being passionate about it and loving what you do. That way, when you're talking to people about what you do, you're not trying to sell them on it. You're really just talking from a place of loving it, right? You're just,
so freaking important.
Yeah, it's
so important. Yeah.
And that goes for both teams and then kind of just rallying people around you, right? And then also, I would say attention to detail is so important, especially with the multifamily. There's so many different moving pieces. I think being detailed and passionate, and then, I think those are great characteristics for a leader.
Yeah, just to hold on one sec, Mark. Just to circle back to what you just said, and this is what I do say at my boot camps is, if you don't love real estate now, then associate pleasure with it. Like equate it to hunting for buried treasure is one example I use, or whatever. And then if you can't learn to love it, then for God's sakes, go do something else. Life is too short. Because if you love it, then you're inspired by it. And if you're inspired by it, like you said, Chris, you're going to be passionate about it. And people feel that you don't have to sell them because they can tell you're so ingrained, you're so congruent with what you're saying that there's no sale involved. You're going to influence them by your passion. So, sorry, Mark, go ahead and ask your question.
No. I mean, that pretty much gave the answer. I was just going to say, for people listening right now that they might be thinking, well, Rod, Chris, if I haven't done any multifamily deals or real estate, how do I know if I'm passionate about it? Rod, you nailed it right on the head there. Associate it with what you are passionate about, whether, it's freedom, traveling, your kids, maybe you want to be a race car driver. Who knows what it is, right? All kinds of different things. And so associating that in your head, I think was really the answer I was looking for there. Let's get into the other side here, Chris. What do you think is the most stressful situation that you faced in your business? And maybe it's in that deal, maybe it's something else.
Yeah, I would say this deal was probably one of the most stressful things, especially in the multifamily side of things, just because of all the aspects that went into it. Like I said, it started at 28 units. We broke it into 2 transactions.
By the way, you didn't talk about what you did with that other fourplex. Could you bring that up, please? Because I'd love to hear it. Because you didn't say it publicly here.
Yeah, so we got pretty creative. We split the contract and we actually ended up syndicating the 24 units and closing on that with our investors. And then the separate 4 units we closed on ourselves. And then we turned around and reached out to some people in the Phoenix market, and we actually have it under contract to sell it. So yeah, we should make about a $50,000 wholesale fee on that essentially.
Boom. It's actually a flip because you bought it,
Yeah,
but it's, if you're not doing anything to it, it's effectively a very short-term, quick, easy flip. Love it, man. Love it, love it, love it.
Yeah.
And so that, and guys, and this is one of the things I teach as well. As you get into this business, you're problem solvers, and you put on your problem solver hat, and that's what you did here, Chris. I mean, you listened really well, and you did what you had to do to make this thing happen. And some people might have walked away from that deal because they couldn't finance that non-contiguous fourplex. So I love it. So let me ask you this: and we just got a couple more questions, but what, for number one, what's your definition of success, Chris?
My definition of success, I would say, just enjoying.
I didn't leave you. I didn't give you a warning on this one. That's all right, but I know you got it. So.
Yeah, I think just enjoying what you're doing in your life. I mean,
good answer.
With your family and your health. I don't think success is always about just the money, right? Like I said, when I quit my W-2 job, I actually made less money, but I felt more fulfilled, right? Because I was able to get a hold of my health better. I was able to spend more time with my family, and then do things that I'm passionate about, not just do things that I have to do to make enough money to live, right? So I think success is different for everybody, but I think just feeling fulfilled.
Oh, great answer, brother. Great answer. What's a favorite quote, or maybe something you've got on your wall, or something that you circle back to? What's a favorite quote?
Yeah, I think it would be, I actually talked about this with Chelsea earlier, is the one that says, if you don't build your own dreams, someone else will hire you to build theirs.
Right. Love it.
I love that one. Yeah.
Yeah. Do you have anything else, Mark?
No, let's just end it with this, Chris. If you could get on TV right now and just give everybody in the world a quick 15-second piece of advice or message, what would it be?
I would say, if you want something, go after it. Don't make excuses on why you can't do it. Come up with solutions on how you can do it. And then, I think Rod says it, pay for speed, right? So whether that's coaching or different books that you're reading, educating yourself, but just get coaching or help yourself out, some sort of self-help, and then don't make excuses and just do it.
Great answer, brother. Great answer. It was great to see you, my friend. Please give your wife a hug for me, and hopefully we'll get to see each other in person again soon when this world opens up. But thanks for adding incredible value today, Chris.
Awesome. Thanks for having me on.
Thanks, Chris.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 41411. That's mentorwithrod.com or text CRUSH to 41411.